Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Phil Mackintosh, chief economist at Nasdaq, to recap November's strong performance as we kick off the last month of 2020 and talk about a November to remember. The major averages posting incredible returns for the month as the S&P 500 held on to record the best November in its history. And Phil, what a couple weeks difference it makes from last time we spoke.
Yeah, although in reality, most of the November returns actually came in early November. So the last couple of weeks has been mostly sideways in the markets. The real positive news was obviously the vaccine and just the reduction in unexpected outcomes from the election. So it was a really positive month, as you said. The Dow Jones had its best month since 1987, which for those of us old enough to remember was when the market sold off over 20% in one day. So, it was a really positive month with a lot of reduction in volatility as well. If you look at the VIX, it's come down much closer to normal levels from pretty high levels earlier in the month.
Yeah, and we also got a lot of economic data that was quite good.
Yeah, I know. That's the thing that's kind of surprising. All of the economics that I read, a lot of people are very nervous about the future and the double-dip recession and just the impact and the headwinds from all of these new coronavirus cases. But the historic data just continues to surprise on the upside. We've got the purchasing manager indexes today are still really positive, expansionary. If you look at a lot of the manufacturing indexes, they're doing better and still expansionary. Home sales, car sales, a lot of aspects of the economy are doing great. Even retail sales is up above pre-coronavirus levels still, although obviously online is benefiting and old school bricks and mortar retail are struggling. But there's a lot of really positive data, and it just continues to surprise on the upside, which I guess supports, to a degree, the market continuing to go up as well.
How are small businesses faring?
So that's, I think, where we've got to start to worry. And I know that's where a lot of economists are focused, is the fact that the services sector has been hurt much more, obviously, because they're much more face-to-face in terms of the things that they're doing, high-risk activities. So the services sector and a lot of small businesses have been hurt more by coronavirus than the big firms. And there's some data coming out that shows that small firms have been closing their doors a lot more, in line with the new coronavirus spike. So there's a worry that there's a underlying more long-term unemployment coming through from people in the services sector, from people that used to be employed by small firms that are now closed. And so even when we get the vaccine, which now seems to be, more and more confidently sometime in Q1, maybe Q2 at the worst, a lot of businesses won't be around to bounce back.
And how about unemployment? Because I think one of the charts that we're looking at here really shows the power of having higher education. It's a real challenge if you don't have a little bit more beneath your belt.
Yeah, and this kind of speaks to some of the K-shapedness of the recovery and the impact of COVID, doesn't it? Because people, and the data has shown that people with lower incomes have had to get back to pre-coronavirus levels of spending much quicker, and yet those people are likely going to have less education. And you look at the unemployment broken out by education, you can see that less education means you're much more likely to still be unemployed. So it sort of highlights the benefits of having an education, but also the winners and losers in this. It's not an equal impact across the economy. And then the other thing that people are sort of missing is everyone talks about that 10 million unemployed number, but there's still a lot more people out there on pandemic assistance, closer to 20 million. So we sort of talk about the fact the unemployment rate has come down phenomenally, but there is an underlying amount of people, like 10 million more people that are on pandemic assistance. So potentially that's helping support spending. It's helped supporting income because there is all this assistance out there, but it's not jobs that people are going back to right now.
And finally, let's wrap up with a recap of COVID-19 data, because in the U.S., it looks like it's actually downticking slightly.
I think that's a little bit of a head fake. I think a lot of people got tested before Thanksgiving and went off to Thanksgiving. And so we're probably just seeing less new cases because people aren't taking themselves into hospital just yet because they've been away. The deaths are catching up to the new cases, which we know come with a 4-week lag. The hospitalizations keep increasing, so there's no stop in the hospitalizations, and that's probably a better sign of what's really going on in the underlying marketplace is that there is still a lot of coronavirus out there. I know that Fauci and a lot of health experts are quite worried about Thanksgiving and the fact that that could become a multiple super spreader experience where people have sat down over Thanksgiving dinners, talked a lot, spread coronavirus, and the broader families are going to have it. So what we're waiting to see next week is whether we have another uptick. And I think a lot of people are expecting that. And that sort of speaks to, what we're looking at driving the markets through December into January, February. It's going to be hard because we're all indoors. Coronavirus is still out there and the vaccine's not yet. So we could potentially have a double dip recession before we have the vaccine and we're all able to get back to normal.
All right, Phil, great stuff. Thanks for joining us on Trade Talks.
You're welcome, Jill.
You got it. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.